I welcome all of you to the AP Stock Trading. We are here to impart some knowledge about stock markets, and it's a vision to develop a trading community, and we always believe we should trade to win and not to lose. Of course, stop losses and losses are a part of stock market, but on a longer run there should be long wealth creation strategies that we should be developing. So let's get started. We are starting with the first video of this channel, AP Stock Trading. We'll be keep uploading few videos on a regular interval that will guide you about how to read stock market, how they'll behave, and how to make maximum out of it. So we'll be posting few videos on and off again. Let's get started. Today I'm starting off with very basics thing. What is stock market? What are the ways of analysis? And which approach suits you? That's what you got to decide. And in the coming videos you'll be getting to know how you can get into it. So before I get started, I would love to introduce myself first because this is the first video. Myself, Amit Popat, I am a qualified chartered accountant and the founder of AP Stock Trading. Been very active in the capital markets since last 5 years, and of course I've gone through the days of losses and then finding an edge and then realizing that if you want to gain in the stock market is something that can give you big money, but for that you need to create an edge. Have attended various training sessions across India, as well as have been a part of international courses through videos and all. And AP Stock Trading has been developed with a vision to eliminating the trading community, because I firmly believe alone we crawl and together we're going to grow. Right. So the first question that we ask ourselves before you start watching these videos or before you start subscribing this channel is why do we need to do trading in stock? Why stock trading? Well, the fact that history suggests only 5% people make money in the stock trading. So the bigger question that we need to ask ourselves is it really worth going into stock trading when only 5% are making money and 95% are losing? Then my answer is yes. You should be going it, because at this risk, stock market gives you money like anything. Stock market is all about risk management. We'll come to that risk management in the future videos, but yes, if you take the risk, stock market will reward you like anything, and because of that reward we are here. And if we can limit the risk, sky is the only limit as far as stock market is concerned. And one more point that I would like to put over here. If over here we say that only 5% people are successful stock traders, but my observation is you go across any field in this life and only 5% people are successful. Rest 95% are just doing their job, meeting their ends, and they are just spending their lives end to end. So it's not about stock market that only 5% people are successful. You go into any part, any walk of field, and you will find that only and only 5% people are enjoying the real success. And that's the same case with stock market. So if the ratio of successful being same, why not to fancy your chances in stock market, which can reward you like anything, unlike jobs and anything else. Trading in the stock market can be real rewarding big time if done with proper risk management. I'll upload a proper separate video on risk management. So as of now, keep it as it is. To make a stock trading work for your favor, you really need to create an edge or an index are analyzed with the assumption that everything is discounted. Everything is discounted in the sense fundamental tries to look at the good sales order. If a company has got a good sales order, its stock prices will go up. If companies has posted a good financial result, its stock prices should go up. But as far as technical analysis are concerned, we do not get into what order company has got, what a financial statement of a company is reflecting, but we just study the price action with the assumption that it discounts everything. It means if company has got a good order, you don't need to check the fundamental analysis. Your price action movements will indicate that company has got a good order. If company is going to post good profits, somewhere your technical analysis will give you a hint that stock prices are about to shoot high. So that's the assumption that everything is discounted. Now the fundamental question that we need to again answer is which method is right, fundamental or technical. then my answer is both are right, and they are not, to me, they are not mutually exclusive. They should be complementing each other, and if you can combine both of this in your trading system, you can really make big profit out of the stock market. Now I remember one of the sentence that Jim Rogers had said. Now Jim Rogers is one of the finest and profitable traders we have in the history of stock market. Jim Rogers had said, I have not seen a technician, I have not seen a rich technician. He was pro fundamental analysis. He never used technical analysis, and that's why he said that I have never seen a rich technician. On the other hand, histories are filled with the examples that people do only technical analysis and they are creating wealth like anything, and they have created in the past. So which approach suits you is something that you have to make a call on, but to me it is not mutually exclusive. They should be complementing each other. Now I'll be talking about technical analysis going forward in this video as well as in the next video. Now as far as technical analysis are concerned, there are three main things that you should take care of. One is which chart type you are looking at, which oscillators you are using, and which time frame you are using. First of all, I'll talk about chart types. There are various chart types which are available in the almost every trading platform, right from candlestick, bar chart, lie chart, Heikin-Ashi, there is mountain chart, there is Renko chart, and so on and so forth. There are candlestick chart, bar chart, line chart, Heikin-Ashi. They are just different ways of presenting the price actions. Like candlestick present the price action of a stock or an index in the form of a candle, and it gives you a range as to how stock prices have gone up or down in a particular time frame. Like if your time frame is 30 minutes, candlestick chart or a candle is typically made of 30 minutes, and it will give you an idea about how prices have behaved in the past 30 minutes. There are bar chart, line chart. Line chart and bar charts gives you an idea about the direction of price on closing notes, and it will not give you the price movement of a particular period. And Heikin-Ashi, of course, Heikin-Ashi is again a kind of candlestick chart pattern, whereas candles are prepared or candles are formed on the basis of average of ABCD, right? Heikin-Ashi is mostly used for long-term trading, or you can say Heikin-Ashi is used for investing. Heikin-Ashi doesn't help you much in intraday trading. That's my personal opinion. And of course, mountain chart, as we spoke about. Oscillators. These are the most powerful thing that I talk about in stock markets. Oscillators are really handy at creating an edge in the stock market, right? There are n number of oscillators. They are presently being working in the market. Different people use it differently, and there are n number of strategies based on each oscillator. But yes, at this junction, I would say stock market is as simple as you can keep, and you make more money when you keep it simple rather than when you know everything, right? It has been my personal experience that stock market doesn't give you much money if you have much knowledge about every oscillator and you know everything. Trust me, trust my words, the more you know, the less you will trade. Keep it simple, have one strategy that works for you, and keep trading on it, and it will keep giving you money, that is for sure. So, there are a lot of oscillators that have been developed, and they are used to create wealth. The most popular oscillators today is moving averages. There are various moving averages which are being considered to see where the trend tends, right? There are 5-period moving average. There are people use 8 moving average, 13, 200, 50. Moving average, again, we have got two varieties. It can be simple moving average or it can be exponential. And exponential or simple can be calculated on the basis of close, on the basis of high. So there are plenty of things as far as moving averages are concerned. Next is RSI, relative strength index. Really important oscillators. In my personal trading system, before I take any trade, RSI is something that I never miss to look at. Stochastics, Bollinger Band, pivot points. We will be talking about each and every of these oscillators in the time to come. But for the time being, Oscillators form a really important part of your stock trading. And third, we're going to be talking about time frame. There are various time frames available, like it starts from 1 minute, 3 minutes, 5 minutes, 10 minutes, 15, 30, 1 hour, 4 hour, daily, weekly, monthly, even yearly, 5 yearly. And in softwares, you can create any time frame that you think fit, but these are the generally used time frame. If you've got proper softwares, you can create any time frame that you want, and they allow you to have a customized time frame also. Now, selecting time frame is also one of the very crucial element of having a stock market analysis and creating an edge. Say if you are intraday trader, then ideally shorter time frames will give you a move that you can capture during the day. If you are a swing trader, maybe 4 hours or a daily chart will give you a better idea. And if you are a long time investor, you can use daily, weekly or even monthly charts. If people are just investing, they would prefer to look at monthly charts. And of course, again, the chart types, as I said, Heiken Ashi works on a longer run. We will come to that, but yes, time frames is something that you have to manage. Select a time frame that fits your trading strategy, and you got to look at which time frame gives you the maximum possible results. You will need to check it out, and then only you'll be able to come to know which time frame works best for you. For me, I always trade on 30 minutes time frame because I never keep my positions open overnight. I am a day trader. It might be that for you 15 minutes work good, for you 1 hour may work good. It all depends on trader to trader. There is no standardized thing that if 30 minutes is working good for me, it should be working for good for you. So these are the three main things that we'll be talking about in the next in the next video. We will talk about chart types, which chart type you should be using when you indulge into a day trading. Oscillators, how they can give you idea about momentum and how we should be able to get the opportunity the stock market presents you. And then of course we'll be talking about time frame. Apart from this thing, there are several other tools that can also be used, like you can use trend lines, trend channels. Fibonacci is also one of the very important tool. We will talk about that also in the time to come, but for the time being, this is my first basic video. Have a proper idea about this. Before you watch my next video, just try to get an idea where you want to go. Are you a fundamental analyst or are you a technical analyst, or you'll be using both? Till then, stay tuned, stay connected to get daily updates on the stock trade setups and idea about trading opportunities. Please join our Telegram channel. It reads as AP Stock Trading. You can search AP Stock Trading in the Telegram and you should be finding our channel. I'm putting a link for you guys. If you wish, you can type it and you can join us. And thanks so much for watching this video. Stay connected.